where we talk about activities that happened on the floor of the stock exchange and the companies listed thereon. I have Bruce Omodium, investment analyst, joining me in the studio. Bruce, how are you?
I'm very, very fine.
How was last week?
No, it was good.
Hope you didn't miss me.
No.
Good. All right, let's get into it. We've got Guinness charts, consolidated Allmark leading the Guinness charts as of yesterday, 8.82%, followed by Prestige Assurance. We've got FCMB, ICO, Japan Oil. This were the top 5 Guinness as of yesterday. And losers, Mutual Benefit, led the pack, losing 4.76%, followed by Wema Bank, Julius Berger, GSK, and Honeywell, top 5 losers. Is there anything you need to note here?
Yeah, look at the gainers, what we call market breaks for the day.
Yeah, I can see that insurance sector.
Yeah, market was up marginally yesterday, just 0.03, and this trend has been there for like 2 days after market have rallied for straight, 7 days, investor took profit on Monday and market slowed down. But Tuesday, Wednesday, market bounced back, looking up. And the factors driving the market I discussed last week are still intact, but people have to look at some things now. Now that, yes, I think all over the world, people are looking to see the outcome of the U.S. election, which is going to influence, the global market. At the same time, crude oil price is also, blending down. The price is looking all down, and the market is also expecting that the banks will release the results going forward. At the same time, also looking at, yes, the other investment windows, which is the money market, is still low. That means funds like to continue to move to the equity market. And I think we're expecting that today being a Thursday, about over 246 billion will be maturing for one of the OMO in the money market. That means funds will go. These are what results are looking at. Yesterday, we tried to see, let's watch what will happen. I see just a little gain. And I tell you that investors are looking at what are the factors of sustaining this trend we're seeing. But for me, the numbers that are coming has really beat expectation, especially in some sectors, shows that despite the economy is still struggling, companies like that are still putting out good results. It's still good thing for the market. Tell you that our economic recovery is also underway. But when you see that the companies that listed, capital market is also a leading indicator anywhere in the world. They are seeing that companies that are listed are producing good numbers. Tell you that economy is gradual. Yes, people say things are not working, but the companies are operating here because the numbers are looking up gradually. Tell you that things are changing. Despite that, normally everywhere in the world, things have gone different way because of the COVID-19 and other things. But the companies are still so resilient to keep operating. For me, it's a good thing for the market.
All right, thank you, Bruce. Let's go over to the earnings reports. We've got Fidelity Bank Q3. That's their third quarter results. Top line was down by 3.74%, but their profits margin went up by 7.08%. So I'm wondering, Fidelity Bank, that bank that's always brings out good results. What's going on here?
For me, the result is not a bad result. I've seen a company like a bank like this having just a marginal drop in their top line. So you should also understand the environment they are operating now and what's affecting the economy is going to reflect on the banks. If you see banks put this kind of number, it should also give them a top of because one, the economy is still somehow, when the economy is slowing down or there's a downturn in the economy, the bank will be the first people that will hit because they lend to the public, they lend to the business, and the business are not doing well. To pay back become a problem. But for me, the bank's result, especially from this Fidelity, is not a bad one. Look at also the profit margin in the results, so that there's improvement in it. Tell that they can afford also to give something to the investors at the end of the year, knowing that this is their third quarter result. And consistently for first quarter, second quarter, they've been an uptrend. Seeing a slowdown at the third quarter, for me, it should not send any panic at this point. Until see the final, with the full year result for, But for the figure, I think that they're able to move their earning per share from 60 kobo to 70 kobo is a growth. And that tell you that, okay, they paid some, what they paid last year was 22 kobo, and you're already having 70 kobo as earning per share at that quarter. As an investor in that kind of company, your mind should be relaxed that, if they are not cutting dividend, they will give you my same 22 kobo, and for that, you need to just hold on. And,
the beauty about Fidelity is not one of those companies that gives you or do profit. Companies that bring a good result and we are not declaring anything or disappoint you.
They will be consistent with their dividend payment. For me, it's a good thing for Fidelity.
Over to Stanbic. Stanbic is that bank that, even though their top line went up by 4.05% and their profit after tax went up by 19.1%, given the fact that they also have good results and the interim dividend was not I'm beginning to be
So
skeptical
about
about their good results, because you cannot say because they have this fantastic result or marginally good results, you are going to get fantastic payouts. What do you have to say about this?
Yeah, for me, Stanbic has its own way of doing things. In terms of even that, their way of doing things also reflect on their price movement on the floor of Nigerian Stock Exchange. Stanbic is a bank that would say, yeah, they are consistent in what, in also performing well. And the shareholding structure of Stanbic has supported their price all this while. Now, this is a bank that has even the least share in issue in the sector, about 10.9 billion ordinary share. While others like what they call Fidelity is having about 40 billion, Disney Bank is about 32 billion, GTV is about 29 billion ordinary share. Because their share in issue is small, and the shareholding structure is tight, because Stanbic South Africa has about 68% or 65 to 60% of the company. That means the bank share is not floating as much in the market. That means the price can be sustained going up. What this figure was seeing is a good figure, but for them cutting their trade dividend for second half of the year, it's a clue that this bank will likely cut their full year dividend. And being a trader, looking at the yield, comparing the price is selling and what they're going to pay, even they pay 1 naira at the end of the year, that's about 150 kobo, and it's selling about almost 46 naira. Now investors should also be looking at the board. In terms of numbers, it's a good number.
And Virginia always say, and you also say that stock is not a spouse that get married to.
Yes.
And when you invest, you expect to make gain. So at the end of the day, if your capital holding structure is tight and your upline and bottom line is beautiful, and then you come with payout that does not benefit me, am I supposed to be emotional holding on to you?
You know, I always say it on this program that every investor trader has their own goal.
Okay.
They will have different goals entering into any position in the market. There are some stocks that is defensive, that this stock, I know the price will go down like others. There are some who are going there for dividend payout, who has dividend yield that is high, can go there. Because that okay, because the way this company is, capital position is easy for me here. These are what you look at when you are investing. For stock like Stanbic, I would say in terms of capital position and kind of defensive, these two areas, they are there. You can use it to do capital, look for capital position. Stock that move from 58 naira to just in less than 2 months, from 58 naira to about 46. You have made more than 100%.
So that's capital gain.
Yeah. And also the movement of the stock in terms of price movement is stable because the share is not much in the market. And when this foreign investor, when they want to buy, want to increase their stake, when they move to the market, so the price will go because they have, they come with dollar. Just because that our environment in terms of policies and the government, looking at people have still not the first, but foreign investor, direct investment is not coming. But Stanbic and stock like what's it called, United Africa, United Capital, because they have more of foreign transactions. So that the numbers are from these two companies. It's different because they do more of that. If you are a foreign investor, want to trade, you go through this kind of company. I also been one of the national banks in Nigeria. They do more business with them, and they have a holding structure as a company. When their securities arm is bringing return, bank is bringing return. They have a lot of source to make money for me. For those that are going for defensive stock and the capital.
Okay, so Stanbic is the next day of banking sector.
Yes.
All right, so let's to agribusiness sector. This is like my favorite sector in the market.
I know.
Agriculture. I mean, in real life, in the market, the numbers are nice, as in no dramas. And a lot of them, they pay out when they actually make money, not audio profits. So we've got Presco Q3 results for 2020. They grew their revenue by 24.48% and grew their profit after tax by 56.37%. That is beautiful. And earnings per share went from 3.22 to 5.03. And given that this kind of company actually pays dividends, so should we be jumping up right now, or is it a good time to position, or should we still wait?
No, it's very good. You can buy now. We're selling at around 65 naira. Why Kogu is selling about 80 naira? That means there's margin of. And also, if you look at the performance, you look at the three results from that sector, from Presco, from Okomo, and from Livestock, they are impressive number. When you want again, you better look at where will I have more yield? Okay, where will I have good capital appreciation? And the numbers are telling you that, this one is performing better. I mean, this one can afford to pay me better dividend. And also, what Prestige did recently, that before the result, they have sent out their full year forecast for 2020. In that forecast, they are supposed to grow their bottom line, which is the product, with almost 90 to 100%, from about 3.6 billion to about 6 billion in that forecast. These results are giving you a clue that they are likely to achieve that. That means the price is likely to also to follow that trend. That means we're going to look up. But when we got to the market yesterday, I think the market yesterday was a bit dull. The market didn't react to it. Why is it that there's a lot of potential in this company? Because the way they move, and if you look at moving from 3 naira 22 kobo to 5 naira 3 kobo, there's room for what? For good payment for there. And also they are consistent in dividend payment. These are 10 investors look at consistent in paying dividend. And as I mentioned, these are sectors that are also enjoying some incentive from the government. On that, you see this number will be maintained. As far as the government wants agriculture to become one of the key sectors, if you look at when they released our GDP for second quarter, solar sector was in green. And then that sector you have something that's working for them, and you want to feed ourselves first too. If you are not feeding us, that will go to export it. For that, I see that sector enjoying government favor going forward, and that's going to impact their number positively. If you're a smart investor that are looking for yield, yes, you can look at this sector, but the yield here, I will say it again, like they are not too attractive because the prices are high already.
But they have tendency to actually appreciate the price.
Yes, exactly. And also, they can grow their dividend, because if you are making profit, you can go to tell your investor, thank you for keeping with us, having confidence in us. You can do that. But when you're not making money, that's where it becomes a problem. People will say that with dividend cut for 2020, there are some companies that will still maintain their dividend income of what we call dividend equalization. Let me not just increase it. Let me just figure out that. Some are going to grow their dividend to tell investors that we have made money. But when we have made money, we are giving it. You need to ask for reward your investor for having confidence in you. For me, now present results very good. They want to.
All right, Okomo Oil Q3 2020 revenue went up by 19.79%. Profit after tax went up by 21.56%. Looking at the numbers though, looking at Presco versus Okomo, you see that Presco actually grew profit after tax more than Okomo Oil. Yeah. But their top line, their revenue is almost same. But 18.9 to 18.63 billion, almost same. I'm not talking about the increase, I'm talking about the absolute money. But you see, I discovered that the market, they just have sentiment. They're just sentiment about stock. Maybe since the time that Okomo turned around, there was a time Okomo was 22 naira plus, some 5 years ago, and they declared a bonus and since that time,
dividend. I agree with you.
So buyers have always seen Okomo as that, because if you're looking at the numbers, there's really no much difference. Actually, you even feel that Presco is actually growing more than Okomo.
Yeah.
But when you look at the price in the market, you see 80 to 60.
Yeah, I agree with you.
And you see that if both of them actually declare the same, you will see that Okomo has a tendency of just going up. The price change actually reacts more than even whatever they decline.
Yeah. They declare.
Yeah.
Actually, if you look at the numbers, you see that Presco number is better. Well, let's factor and look at the figures. But you look at the earnings per share. You see, we're having about 5 naira 24 kobo for
Okomo, then 5 naira.
You now go back and see that share in issue is very important. Okomo has smaller share in issue.
Oh, you see? So more money will go on.
Smaller share. And that of Presco is higher. And people having that higher share in issue also maintain 5% that this company is going somewhere. Why? It has about 1 billion ordinary share. Why Okomo has about 950 million shares? It's still below 4 billion. Let me tell you that for me, there's potential in two of them to rally. But actually, seeing Okomo at 18 already, a design investor or a smart trader, that, this stock Presco is likely to move to join Okomo or because if you are buying at 65 naira, it's good to 68, 78, 75. You're already in profit. You can come out. And I think that will drive it. What will drive it is earnings. And I tell you that if you are really a good investor, there are factors that come with any season. That any season, there's an aura that comes with it. Go with that aura, go with that reaction, because that season people want to reposit their portfolio. If this company is not doing well, I need to move to where it's doing well. But if the sector is not doing well, then that change will also impact stock. I mean, if I think this number now, you are not taking position in the Presco, you should also ask yourself, what am I waiting? Towards the take position. If you are not getting immediate rally now, towards the end of the year, when they will portfolio shuffle, as people are preparing for end of the year and corporate action in 2021, you should define rally, because look at where can I get value for my money? Especially now that the money market is nowhere to go now. Because the yields are really failing up. The bond market is unless you are entering a long run.
Even at that, how much?
Even in the long run. For that, smart investors should look at where they can make money. Usually, if you are earning money, you need to multiply that, you need to double it, because the rate at which inflation is going, you need to also go your fund so that you can meet up with what is happening in the economy.
Thank you, Ambrose. Let's look at livestock feed. Okay, livestock is like the junior brother in that sector. Yeah.
Yes, only junior.
Junior brother. I mean, revenue grew from 7.43 billion to 7.99 billion. That's just like 7.5% growth. But interesting, profit after tax went from 9.58 million to 224.8 million. That's like 2,247% gain. Okay, but by the time you even look at the absolute money, do 224 million and compared to the billion, it's still jogging behind them. But
well, also look at the price too.
Yeah, bro. How much is livestock now?
Like what about it's 1 kobo. It's 1 kobo to 18 naira stock. Yeah, you see, the way your hand is, that's where you cut the food.
That's just baby.
But the good is that there's potential for this stock to move higher, even in terms of pricing, in terms of price, or in terms of the company operation. Because if we are looking at the work, feeding ourselves, and we are opening more people are going to more what's it called poultry business, other things. And they are so fit, and also covering the southwest and all those stuff. There is a market for them, and they are doing other things apart from the feed. They are doing other things. For me, there's potential for this kind of stuff. If you're a long-term investor, you might not be interested in the immediate dividend they're going to pay you. And this company, for the past 5 years, they've not paid dividend. But the numbers we are seeing now, I think by the end of this 2020, we expect dividend. Whether how small it is, but it will now open up for dividend payment. That means you can look the way of this kind of stuff. But the sector they are operating, I think there's a lot of incentive. This sector and healthcare sector is where the government is really focusing. And healthcare sector, government intervene. Not only that, the COVID-19 thing globally is also impacting that sector. There's a lot of activities in that sector now.
Okay, let's look at the food and beverages. Flour mill Q2 2020 went up by 31.15%, and profit after tax went up by 68.26%. That's impressive, right? Yeah. But I need to compare it to Northern Nigerian farmers too. They also had fantastic results in percentage terms. I mean, they grew their revenue by 5.46% and profit after tax by 195.45%. But when you're looking at it in absolute, of course, farmers can swallow them up. Can actually swallow them. I mean, revenue for farming is about 355.11 billion, while Northern Nigerian farming is just 4.34 billion. But what is the cost of flour mill in the market, and how much does
flour mill is selling for 28 naira something now, while the other was selling for 5 naira, 2 kobo for Northern Nigeria. But the good is that these two companies are like father and son.
Farming has
about 60% of.
Why can't they just merge? I mean, why are they splitting on the market?
And the good is that the two are doing well in the market. And also, I know this Northern Nigeria has been like they coma for like years. Yeah, but last year they just woke up, coming with the dividend of 25 kobo for more. And since that last year, the figures are started looking up and pointing up. For me, it's a good one. And also, if you look at the kind of service product they are doing, flour, all those stuff. In this part of the world,
we always eat bread.
And for that, but if we compare this number to what came from Unilever, from Nestle and Cadbury, and Unilever was something else, deep into red. Nestle was a decline in their top line and a decline in their bottom line. While the Cadbury was also a decline in this number. But this one clearly from flour mill, from Northern and from Honeywell, the flowers have between themselves, their numbers are better, followed by Dangote sugar and then Nascon. These numbers are different compared to those that are into really food, usually Unilever, Cadbury, and
it's understandable.
And Nestle.
One batch is into finished goods. I can choose to not take Milo. I can choose to not take butter. But one batch is into raw material, which is needed to actually produce some other thing that's actually important than the other. So they might be in the same sector, but they're actually not really doing the same thing. I mean, Nascon, Dangote sugar. Sugar is beyond the sugar that we just take. There are a lot of things we actually use sugar for industrial purpose, unlike the Nestle and the Cadbury of this world that are actually bringing out products that we have to sit on the fence, on the shelf, and it's me to have money to actually buy. And I can substitute. I mean, I don't need to take the weight.
Yes.
I can even start weighting my weight.
I'll be taking water.
Thank you.
But they have water. They have water too now.
All right.
But it's good. But it's better to balance their portfolio going forward. Now that you are saying this third quarter result, I always say they're good at foreign us in the best data. Third quarter earnings of any company anywhere in the world is very Because give insight what you expect at the end of the year. Now we have seen the third quarter. You can really put their last full year number and the third quarter and see where they are going. Are they making progress? Is it possible that what they paid last year, the earnings they are making at third quarter, will they cover what they paid last year? Or if they at the end of the year will have a better earnings than no? These are the things you'll be looking at. That's why those that are really, anywhere you are in the world and you're interested in trying to take opportunity in the market now, you need to also join us on the coming summit. Why? Because it's an online thing where we go to how to take advantage of this profit opportunity in the market. There's a lot of opportunity in the market now. You have to open your eyes. Where should I start making my money now?
Okay, let's look at this sector before we go into how you need to reposition your portfolio for 2021. Healthcare sector. It's like when you take agricultural sector, you take health sector. These are the two sectors that actually you can put your money in now and just like don't sleep, just calm down
and
watch. Mm-hmm. They're even less volatile than bank. Anyway, banking sector has always been volatile.
Private sector give you more money.
More money, yeah, but they are more volatile, so you can actually trade with them. But when you're talking of stability and good performance, health sector and agricultural sector, they've been performing here. So GSK, they grew their revenue by 3.34%, moving from 15.92 billion to 16.45 billion, and grew their profit after tax by 1.1%. Not so fantastic, but going over to Fitz and Healthcare, Fitz actually grew revenue by 30.28%, and profit after tax by 257.75%. So you look at same sector. Okay, let's look at May and Baker too. They grew revenue by 8.85% and profit after tax by 43.95%. So the three results were fantastic, but Fitz apparently had the best results, followed by May and Baker, then GSK. What do you have to say? Same sector, but
that is, the company has to do with your product side.
Okay.
If you look at this company, I think Fixing and
May and Baker
has more product line compared to GSK. And also GSK for me is the leader in that sector. The number we're seeing is not too attractive. If you look at the earning per share, that's what investors are really interested in. At the end of the day, even though you make billions, what comes to investors? They want to look at the earning per share. So will you support your price? Will you pay me something? After third quarter, you are seeing 36 kobo earning per share for a store that is selling for 6 naira. Why for Fixing for third quarter you are seeing 47 kobo earning per share? Why for Nomi and Baker you are seeing 40 kobo earning per share? These numbers are higher than that of the leader. I'm selling higher. Investors that know, okay, at the end of the day, we are paying something. My dividend yield for me to go if they maintain what they paid last year, or it will be better for me to enter. That's why I see GSK was among the stock that lost yesterday, just because people are looking at alternative. Because I tell you, this period is where investors want to reposition their portfolio. Where is an opportunity where I can take make more money. For me, investors should just take time with their portfolio now. Look at sector that has high potential to support you to make your money, because you have a goal. You're not in the market, you have to follow the market trend. Before you enter the market, you have a goal, and also have your selling strategy and your buying strategy. Okay, so we've got 2 minutes. Let's introduce, we have to continue next week, how investors can actually reposition their portfolio against 2021. Is there like 2 months or like 3 weeks? Just like about 60 days. Yeah, what do you do at this point? What you need to know your goal. And also where you are making loss. Because if you're already in the market, not in the position, you know the sector you are for now. That sector is very important. The companies you are, the companies where you are still posting good numbers, and expecting that coming on will be better. You don't need to move. When the position where you are, you see that you are already down, and consider if I sell even at a loss now, enter another position. That means you need to also look at your portfolio first. Look at your investment goal before you can now start your position. And that's why if you want to do that, you also look at the sector and the company performance. These are the things. Let's talk about it. These are the 5 things I should look at for now. We'll talk about that fully next week. Thank you very much, Ambrose. So we are hoping that this U.S. election does not negatively affect the market. Trump or Biden, who are you? No, doesn't even matter. No, but actually, whoever I want, the good thing is that there will be stability in the U.S. I want the stability in that, and being the power of also to trigger down to other economy. That means we see that their bailout will continue. And when there's a bailout for economy, because also trigger down. For me, the two are almost having interest of the economy. That's what matters. Because economy is what drives anywhere. Whether you're a politician, your economy is not doing well, they can't pay you well. If the economy is doing well, you cash of getting more money. But if your politician economy is dwindling, you show that thing you are earning is not sustainable. That also go down. So everybody want to look at the economy first.
Thank you very much, Ambrose.
Thank
Of course,
you.
this brings us to the end of the show, Prophet Point. And the show is on same time next week, Thursday, 11 to 12. Same station, of course. Thanks for joining in. Remember to keep safe and wear your face masks. Coronavirus is still real. Hope to see you next week. Have a nice day. Goodbye. I'm good.